am not a financial advisor. This video is just showing what my thoughts are on potential trades for my own portfolio. Do not copy me. And now, with that out of the way, let's get on to the video. Alright, so now just a quick recap of what I did last week. I did a few trades January 5th, 6th, 8th, and 9th for SoFi, Navitas, Super Microcomputer, Robinhood, and Hood. Robin, actually, not Hood. Robinhood and Robin. Robin being the I think it's a 2x or 3x leverage. I think it's 3x leverage to Robinhood. So that one is you put up less capital and you get a little bit better premium, but got to be careful with that one because it moves up and down 3 times the amount that Robinhood stock moves. So I did one put call on that January 8th for the $45 strike, ending February 20th, and I received $277 for that one. These, by the way, are monthly contracts, so there's nothing you can do. You can get in within the month, but you won't have a full month unless you go to the next month because they're just monthly. Unlike Robinhood, Hood stock, you can do weekly, bi-weekly, monthly, whatever with those. So the total so far around $1,500, $1,552 so far. So today I'm going to talk about what I may do or may not do this next week. And I'm going to be playing the same stocks that are on my list right now. SoFi, Navitas, Robinhood, Super Microcomputer, and I added Uber onto my list. All of these have earnings coming up, and some of them have already run up. Some of them actually dropped in price before earnings, which is a good opportunity to do some cash secured puts in case there's a run up. So case in point, Uber here, I think this one went down in price. So the last 3 months, the highest has been around $99, $100, somewhere around there. It is now around $85, with the lowest being around $78. So since we got earnings coming up soon, Uber is February 4th, so we got a couple weeks. The implied volatility is going to be spiking up, if not spiked up already for this, which means selling cash secured puts can be very good. You can get a lot of premium for that, and we can actually go further down in price for less risk and still get some pretty good premium. So let's see here. We got the 19-day, that's like 2 weeks. No, 3 weeks. This is 2 weeks. But let's just say earnings is February 4th. So let's see. We got the February 6th or January 30th. If you want to do it before earnings or get in and see what happens after earnings, let's see the 26th day. So it will end February 6th, but the earnings is February 4th. And they did beat on their earnings, the last 2 earnings. So it's possible they could beat again and then their price can go up. And sometimes they beat and prices go down. Sometimes the opposite happens, but let's see what we can get here. So the price is $85.30 currently, and this can change a little bit tomorrow when the market opens, but let's say we want to do a cash secure put. The lowest was 78-ish within the last 3 months. So let's see if there's anything 78. And we do. So we can get $58 for the 78 strike, $55 for the 77 strike. It's not a lot of money to hold it for about a month, but it is a big drop from 85. So if you want to be a little more risky, you can get $211 for the 82 strike. Still lower than the 85. So it's something to think about. If the price drops a little bit more, if it goes maybe towards 80, then the 78 and the 77 will pay more, and that's more favorable. So that one is more of a question mark for me. Not really into Uber all that much, but the rest of these I've been playing. So SoFi, one of my favorites. They beat earnings quarter after quarter after quarter, and I'm pretty sure they're gonna beat earnings this time around too. And they are on January 30th, so I already have a lot of plays. I have one ending this week, so if the price goes up, I will probably buy it back and then do another cash secure put. And depending on the price, so right now we're at 27.43. Let's see what we can do here. We'll do 2 weeks out. So if I buy out my current contract, if the price goes up, or stays the same, because my actual contract is for the 24 strike that I have, and it's currently 27. So probably by Wednesday I can buy it back for like $2-3, and then I would probably go for another 25 strike, and it's $25 right now, but by then it might be like 20, unless the price goes down a little bit. So not much money to be made there for this price, but it's better to be safe than sorry. And you know, the lowest has been 23, but it's been a while now. It's been about a month and a half. If I'm looking at the charts, 3 months, and this is like the halfway point, so about a month and a half now. And I'm pretty sure the stock will go up instead after earnings or right before earnings. So even if it drops to 23 and I get the shares, I could also roll too. It doesn't matter. I will sell cover calls, which I already have one cover call in play, I think. Yes, I do. I have a 30 strike in play right now. So Uber is a maybe. SoFi is a probably. I'll do one. I've done so many trades this beginning of the month that I'm kind of capped out on funds until these trades either expire worthless, or I can work with them to roll or get out early and do a different trade. SMCI, same thing. They have earnings too. I also have a contract with them. This one, earnings is, let me see, SMCI, February 10th. So still got a little bit of time, but it has dropped. So I had a cover call, cash secure put, I think for 30 strike. And I rolled it to 27.50 strike for a decent amount of premium. And that one I'm just gonna hold. I think that's a very good price now. I was thinking 30 was a good price, and then it dropped. So 27.5. I think that one, I probably will not roll it. If I get assigned the shares, I'll just do a cover call for that same amount or higher, and get out of it in profit. But that's SMCI. I don't think I'm going to be able to do anything with that for a little bit. And Navitas has earnings February 23rd. Already ran up a little bit to $10.15. So as you can see here, it was around this chart. It's blocking me. There's a buy button and a short button right on top of the chart. But it looks like if it was around $17-18 here 3 months ago, somewhere around October 20th, 21st, and then it dropped all the way to the lowest around 680, 675. Now it went back up to 10. Some major swings here. But Navitas, February 23rd, and they beat their earnings, their last two earnings. So possibly beat this one too. And then with tech stocks like these, we can have a big run up and then a big drop. So I think this is the beginning of the volatility here. A little bit of a run up, and then as we get closer to earnings, we might have a huge drop or a huge run up. So right now I have a cover call for $11.50, and I have a couple of cash secure puts in the what is it, $7-8 range. So those are in play. We'll see what happens with that. And then the next one is Hood. Robinhood, they have earnings February 10th. They beat on their last three earnings. So they're doing very well. It's one of my favorite stocks. And I'm all tapped out on Robinhood. Nothing I can do right now, but if I was to do something, it is at 115. I probably would have done like a 113, 114 strike, or even 112. Pays pretty well. $2.76, 276 under 112 for 2 weeks. That's very good. And you can even go lower, you can do something like the 107 and still get some decent premium. It's just the way it is right now. Earnings is coming up. Robinhood is very volatile, up and down, up and down. You play these right, you just make money. But for now, I'm all tapped out. So what do I do with all these cover calls and cash secure puts? What do I do with the premium? So I put some of it away. I put some in a separate account for taxes, and then the rest I reinvest it with some cover call ETFs, dividend ETFs, like QQQI, SPYI, XDTE, QQQY, some monthly payers, some weekly payers. I hold Maggie, MAGY, some pretty high yield payers that generate income for you on a weekly, monthly basis. Some of them do appreciate in value, like SPYI and QQQI. They have appreciated in value for me as I hold it, and they're very reliable payers. Others like XDTE and Maggie, they pay weekly, but these are ones that can erode over time. Your principal will go down basically over time if you buy them at the high price points, high points. So you got to keep track of them. Don't just buy randomly with these high payers. It's best to do it on pretty good dip days so that they recover. So when you buy them at that price, they'll raise in value instead of go down in value, most likely. It's a good way to be strategic, and it raises your chances of not letting your capital erode while still getting good monthly and weekly income. So that's pretty much what I do. One day I will put out videos about my stocks and ETFs, but I'm currently working and I don't have time to do that. But one day, hopefully, I can retire and I can show everything that I do and put more effort into the videos. That's pretty much it. No more rambling. I'll see you guys on the next one.